quarter of the Bitcoin supply is now underwater. Investors are on edge. Glassnode says more than 1/4 of all Bitcoins were last moved at prices above today's market. That makes the current structure look a lot like early 2022, right before a brutal bear market. Bitcoin trades around $93,000, only a few percent above the start of this month, but far below the peak near $126,000 in early October. From that high, the price has dropped by more than 1/4. November alone saw a drawdown of almost 18%, with Bitcoin stuck below $94,000 and twice dipping under $84,000. Glassnode tracks every on-chain move and estimates a cost basis for each coin. When a user sends one Bitcoin while the market price is $120,000, the firm treats that as a purchase at $120,000. Right now, this data suggests that roughly 1 in 4 coins was acquired above the current level. Historically, that much unrealized loss across the network is rare and often marks moments of stress. Analysts say Bitcoin now sits in a fragile zone between $96,000 and $106,000. Failing to hold that range could open the door to deeper downside. At the same time, a convincing reclaim of that area might signal the start of a new leg higher. Glassnode warns that until Bitcoin moves firmly above $106,000, the market will stay highly sensitive to macro shocks and risk-off headlines. The last time the on-chain picture looked this similar was in 2022, at the start of one of the harshest bear cycles in crypto history. Back then, heavy selling and collapsing leverage drove prices steadily lower. Today, there are differences. Capital flows into Bitcoin remain slightly positive overall, even if momentum has cooled. This modest demand helps explain why the price is still hovering around $90,000 instead of sliding into a full capitulation. Exchange-traded funds tell a more cautious story. United States spot Bitcoin funds have shifted from strong inflows to broad-based outflows. According to Glassnode and data from SoSoValue, investors pulled more than $4 billion from these funds over roughly 7 trading weeks. Only 2 of those weeks ended with net inflows. Outflows have hit nearly every issuer, hinting that many institutions are trimming risk as conditions weaken. Yet long-term expectations remain surprisingly optimistic. Experts interviewed by major crypto media outlets still see a path for Bitcoin to finish 2025 near $100,000. Large managers such as Grayscale and Bitwise echo this view in their latest market reviews. They call out short-term downside risks, but argue that the broader adoption story is intact. For investors, this environment demands discipline. Short time frames may stay volatile as macro data, central bank messaging, and fund flows push prices around. But patient holders are watching on-chain data, looking for signs that coins are moving from weak hands to strong hands. If Bitcoin can reclaim the key range and ETF flows stabilize, sentiment could turn quickly. If not, another prolonged drawdown cannot be ruled out. Never risk money you cannot afford to lose in this market and keep a long-term view. This has been BlockBrief. Stay informed, stay ahead.